Okay, good morning everyone. I'm Tracy with A&J Accounting. I have been in accounting since I was 15. That's been many years. Don't ask, just many years. I have 3 children, 2 of my own and 1 is a stepchild that I've had since she was 10. If you happen to call the office, you will reach her. Her name is Barb. My other 2, one is a police officer and the other one works with her dad in a janitorial restaurant supply. I have my master's degree in accounting. I also have a minor in law and a minor in computers. So I can help out in many areas with the accounting. Setting up the computers and making sure that you're covered by the law aspects and everything else that you need. Does anybody here know what the first corporation was here in the United States? You guys aren't going to believe it when I tell you. It's the Harvard Corporation. It is the oldest corporation here in the United States. It was officially set up in 1650, before we had our independence from England. They were kind of like paving the road for us. The legal name of that business is the Presidents and Followers of Harvard College. The corporation isn't really, they call it now the Harvard Corporation, but that's the legal name of it. In 1776 is when we had our independence, and the United States had decided, let's break away from England. Everybody knows this part. What that did, with Harvard already having their corporation, was lead way for us to be able to start setting up corporations here and not have to pay back to England the money, and the money was able to stay here within the United States with the businesses here, so they could thrive and do better. When they had originally set up corporations, they were only allowed to have the activities that would benefit, such as roads, canals, railroads. Like what we see corporations nowadays were not allowed. If you broke any of the laws or anything of that, your corporation was gone. You don't have a choice in the matter. It's not like going to court. That's it. You're done. You're out. They had very limited time that they were allowed to have the corporation. It's not like now where they can live on for quite a long time. You can pass them on and everything else. They were restricted on the time limits on that, how those corporations were allowed to be. And again, like I said, if they violated any laws in any way, shape, or form, they revoked the corporations. Nowadays, to set up a corporation, you have to go to the state. And each state has their own laws on how the corporations are to be set up. So it matters where you want to be incorporated at. That's why a lot of people look into some of the other states, because the laws are different from state to state. Some are a little more lenient, some are a little stricter on what you can do and what you can claim and how you can go about and do that. First corporation I'm going to talk about is a C corporation. That is usually more for the bigger corporations like Apple and Ford and GM and things like that, where you want to be able to sell your stock publicly to raise capital to help with the business. Those type of corporations are fairly easy to set up. They're not too difficult until you start getting into where you start selling the stock, and then you have to go to the SEC and fill out a whole bunch of paperwork, give them your first 2 children, you know, half your blood, and things like that. With the state, it's still fairly easy. You just go up, you tell the state, I want to be A&J Accounting and Associates, and the state will approve it or decline the name. And then you have to also make sure that you file not just the federal tax return, but the state tax return as a C corporation. The advantages of the C corporation is you have limited liability. It is its own entity, that if it breaks any laws, has any debt, closes its doors, you can walk away as the owner. The company is the one that holds all the liability and everything on that. The ability to generate your capital is a good reason to have a C corporation. That's one of the advantages. Your corporate tax treatment. Usually the taxes are a little bit lower when you're taxed as a corporate level than as a personal level. And you can attract employees, quality employees, like Publix, because they can offer those stocks and stuff to their employees. And so they feel like they own part of the company, and they feel like part of the company, so they work better and you keep them longer. Disadvantages of a C corporation. There is more time and money involved to keep track of those records. There's double taxation, because when you have a C corporation, The corporation gets taxed if you made $10,000. You want to take half of that for yourself, you're going to get taxed as a dividend of some way of income with that. As that comes back to you, whether you take it as a paycheck or as a dividend, you're going to be taxed a second time on that. And a lot more paperwork. IRS likes to kill trees, and when it comes to a C corporation, they kill the forest, not just the trees. There's S corporation is our next part. That was not here in the United States and available until 1958, when President Eisenhower was criticized about only going towards big businesses and not caring about the mom and pop shops and things like that, because that's what makes America grow. It's the smaller companies and corporations like what we all have. So in 1958, it was brought to Congress, and that's when they decided they were going to bring up the chapter sub S of the tax code as a larger part of a miscellaneous tax items, and that's how we got the name S corporation, because of the chapter that it's in within the tax codes. To be an S corporation, you can be a domestic enterprise. You cannot be a foreigner to own an S corporation. You can only have a limited number of shareholders. Most of us, it's not a big deal, because 10 or 100 is your maximum that you're allowed to have. So for all the mom and pop shops and everything else, that is not a big deal at all. We're not going to have more usually than 100 shareholders. Again, they are also limited and protected, just like a C corporation is. That whatever the business debt is, or if they violated any laws, that all goes and follows the business. It does not follow you personally. You're limited by who can own an S corporation. It can be a single person. It can be certain trusts and estates, and that's all that can own an S corporation. And there's only one class of stock with an S corporation. When you have a C corporation, you can have common stock, preferred stock. With an S corporation, you only have one class of stock. That's all there is. An S corporation is fairly easy to set up. Again, it's the same way with the state that you do a C corporation. You go to the state, you tell them I want to be Tracy with A&J Accounting and Associates. The state approves it. You go and you get your tax ID number. You file with the state if you're going to have to take, claim sales tax, and away you go. With an S corporation in the state of Florida, you do not have to file a state tax return. You only have to file the federal tax return. The income that comes through on that will go onto your personal return. It is not taxed as a corporation. So if you made $10,000, it comes through onto your personal return, and that's where you pay your taxes at. It's on the personal return with that. To become an S corporation in the IRS laws, you have to fill out the Form 2553, which is an election by a small business corporation, and that tells the IRS, and they'll approve it. They will send you this piece of paper one time saying that they accept you as an S corporation. You lose it, a hurricane comes through, the dog ate it, you're in trouble. That's the only way we can prove it, and they will never give it to you a second time. We would have to start that process all over again. Some of the advantages of having an S corporation is the tax savings. And there's also extra business tax credits and stuff that you get to take and expenses that you don't get as a C corporation. You have the independent life, just like a C corporation, and the limited liability, like the C corporation. The disadvantages, there's stricter operational processes and shareholder requirements, which means I'm working, the business made $10,000, but it didn't pay me and I'm working. The IRS has the right to come in and say that $10,000 is your wages, and now you have to pay the federal tax and the Social Security and everything on that. So they expect, as corporations, to pay their owners that are working a fair wage. Otherwise, everything is going to get taxed as wages. The disadvantages is that also an S corp, well, no, that's an advantage. An S corp can own up to 100% of an LLC. An LLC cannot own an S corporation in any way, shape, or form, because the IRS says it gets too diluted and they cannot follow the income to make sure that they've got their share. LLCs, believe it or not, I was really surprised about this, started in Wyoming in 1977. And the Wyoming wanted to attract Texas oil companies, so they wrote up a statute to try to set up for the LLCs. We were the second state in 1982 to set up and enact an LLC. For once, we were not the last people to have something. So I thought that was kind of interesting. Each state is different. Each state can set up and say this is how an LLC can be run. In the state of Florida, if you're the only owner of an LLC, you are a sole proprietorship unless you tell the IRS you want to be treated differently. If there's 2 or more members in an LLC, you're a partnership. You can also still be treated as an S corporation, which there's extra paperwork and stuff that you have to fill out. With an LLC in our state, you have to have an operating agreement. You have to have, I lost my spot. Articles of organization. Also with an LLC, you have to make sure that it says LLC or limited liability in the name. And you're not allowed, as an example in the state, to have bank or insurance in it, which is a state rule. I guess they don't want banks or insurance companies to be able to have any of that liability. You know, they want them to be more exposed. And they don't want to give them that liability part of it. LLCs, there's more paperwork to be done with it. If you want an LLC and you want to be treated not as a sole proprietor, the IRS requires us to file an 8832, which is an entity classification. And then after you file that, if you want to be an S corporation, you have to file that form 2553, just like with the S corporation. You still do have some limited liability with it, not as much as you do with an S corporation or a C corporation. You have less record keeping, and it's easier to share the profits. The IRS will not come in and go, okay, you made $10,000, you did not pay yourself a fair wage, this is all wages. The IRS won't do that with an LLC. So you can still take it all that way and not pay yourself, and they don't care as much because I figure they're going to get their money either way. The disadvantages is there's a limited life, and then if you're a only owner, it comes through onto your personal return and you're going to be paying self-employment tax. Here in the state of Florida, they just changed some of the rulings last year that if you have your articles of incorporation, not articles of incorporation, but articles of operation, it can supersede the state saying that it's a limited life. And what they mean by that is Mary Ann and I own an LLC together. I don't want to do this any longer and I want to leave. The state requires you at that point to dissolve the LLC. It can't live on. Mary Ann can't just have it on her own. But if we have articles of organization in there, we can have a buyout program within that. I don't want to do it anymore. She can buy me out. I can buy her out. God forbid we get hit by a truck. Our children can, you know, we can have that provision in there on where now it can live on. And that is also something that will oversee even what the state says. They will go by our articles of organization and not by their rules. So it's very important with an LLC to make sure that you do have your articles of organization in there, so that way if the state or anybody ever comes in, that you can show them, no, this is how we want it, and you don't have to fall back to just the default rules. Anybody have any questions? Okay, well, thank you.